Good evening, everyone. I'm Brian Trumbore with your nightly review for Wednesday, April 17th. It's 4:02 p.m. Eastern Time. What a week. Monday, the Dow Jones was down 265 points. Yesterday, it was up 157. Today, it finished down 138 to 14,617, off 0.9%. S&P 500 lost 1.4% to 1551, and NASDAQ lost 1.8%. Gold closed at 1374. I made a mistake yesterday. I'm always thinking week in review, weekend prices. So when I said gold was 1570 10 days ago, it was 1578 on April 5th, but it was also 1570 the morning of Friday, April 12th. So it went from 1570 in the morning on April 12th, Friday, all the way down to 1360 in 2 days, and now it's 1374, and a lot more on gold in a minute. Oil finished at 86.80, down almost $2. The 10-year Treasury 1.70%. Bull bear reading for Wednesday. Bulls 47.4, bears 20.6. That's a contrarian indicator. Well, we certainly learned today to wait 24 hours, didn't we? In terms of the investigation into the Boston Marathon terror attack. But back to stocks. Bank of America finished down about 5%. Its revenues at the consumer, mortgage, and investment banking division level were down with its just released quarterly earnings from this morning. Its earnings per share missed. Textron, which among other things is a maker of business jets, saw its shares plummet 14% today as it lowered its forecast for biz jet sales. Shares in Apple finished at $403. I have more on that in a second. Actually hit $398. But some of the big news came from Europe. European markets were awful. London was down 1%, but Paris and Frankfurt were down 2.3% each. Spain down 1.8%. Euro car registrations, or car sales, in the month of March were down 10.3% over year-ago levels, the 18th consecutive monthly decline. Peugeot's sales down 16%, Volkswagen's down 15%, Ford's down 16%, GM's Euro sales down 13%. Germany's auto sales were down 17% in March over a year ago. But I thought Germany was doing real well. One analyst said Germany seems to be, quote, in free fall. That minus 10.3% figure for Eurozone auto sales is a 20-year low. A couple others, Toyotas were down 17%, Hyundai's down 10%. In the UK, the unemployment rate came in at 7.9% for the period December to February. While that sounds good relative to some of the other figures, like the Euro-wide 12% unemployment rate, the UK added 70,000 jobless, so just more heat on the Cameron government. The Federal Reserve issued its Beige Book survey of business activity in its 12 regions today for the period from late February to early March. It said the U.S. economic expansion remained moderate. Particular strength was seen in industries tied to residential construction and automobiles. Most regions said residential and commercial real estate improved markedly. Consumer spending grew modestly. Employment conditions remained unchanged or improved somewhat, according to the Fed's report. The International Monetary Fund, IMF warned on Wednesday today that extraordinarily loose monetary policy risk. Let me start over. Extraordinarily loose monetary policy risk, sparking new and dangerous credit bubbles, which threaten to tip the world back into financial crisis. As reported by the Financial Times, in its Global Financial Stability Report, the fund cautioned that further policy reforms were needed urgently to restore long-term health to the financial system before the long-term dangers of monetary stimulus materialized. Without continued progress, the IMF said the global financial crisis could morph into a more chronic phase marked by a deterioration of financial conditions and recurring bouts of financial instability. In the Eurozone, the IMF said there was a sustained need to improve the health of banks in both the troubled periphery and the core. But in the periphery, Italy, Spain, Portugal, Greece, over into Eastern Europe, the need to restore banks to health was acute, as many banks, the IMF noted, still face difficulties in funding themselves at reasonable rates and passing on low interest rates to companies and households. PIMCO CEO Mohamed El-Erian, in an interview with the Wall Street Journal, said investors should recognize that in virtually every single market segment, we are trading at very artificial levels. It's true for bonds, it's true for equities, it's true across the board. El-Erian worries about the central bankers, but he's not worried they're going to pull their easy money policies too soon. We think they will most likely stay too long, and they will consciously make that mistake. In order for central banks to achieve their ultimate economic objective, which is growth and jobs, they have to push investors into taking more risk than is justified. The way central banks are operating is through the wealth effect and the animal spirit. If these levels aren't validated by the fundamentals, then investors will get hurt. Regarding the crash in the gold price, Ed Yardeni, noted economist, said central banks can be opportunistic and proceed with quantitative easing. Now the gold market is surrendering with regards to its hyperinflation fears. They could also argue the weakness in commodity prices suggests a growth concern, and so all the more reason to keep QE going. Jonathan Wright, a former Fed official, said, with the recent signs of weakness, I don't see any likelihood of monetary stimulus being even ramped down anytime soon. For the fourth year in a row, the year begins with noises about the imminent exit strategy, which then fizzles out. Joseph Gagnon, another former Fed official, now with the Peterson Institute for International Economics in Washington, said that the Fed will see cheaper commodities as reinforcing the need to keep buying assets through this year. We haven't recovered yet, and we are not recovering fast. In no sense we are having an adequate recovery. Neil McKinnon, a former Treasury official, now at VTB Capital in London, said prior to this, markets were concerned that QE means inflation, but we're having QE, not just at the Fed, but at the Bank of Japan, and yet the global economy looks more uncertain than it did 3 to 4 months ago. Now, whether it's wages or CPI inflation, the general picture is that inflation is still very subdued. Meanwhile, the Financial Times reports that the tumbling gold price has personally cost billionaire hedge fund man John Paulson at least $1.5 billion so far this year. But Paulson is still ahead on his gold bet over the long term. In a statement, the firm said that it had established the gold share class in April 2009 at an average cost of around $950 per ounce, and again gold is at about $1370. One man who doesn't get enough credit for his amazing market calls is Double Line Capital's Jeffrey Gundlach, who's now warning investors against joining the stampede of euphoria overwhelming the stock market, at least until the last few days. Global growth will remain disappointing. Interest rates will stay longer than people will stay lower longer than people think, and treasuries could benefit as the U.S. Federal Reserve has indicated it plans to keep buying them. During a discussion with USA Today, Gundlach talked about the ongoing rout of gold and said it's headed lower still. Gold may hit its first test on the downside at $12.15, and if that fails, could be headed to $10.66. He said the ongoing bear market for gold has smashed the confidence of investors. That confidence smasher will not be reversed quickly. Gundlach reiterated his concern investors continue to jump into overvalued assets. The recovery in real estate, while pronounced off the bottom and likely to continue, is just inflating another bubble. Who knows how this new housing bubble will end, he says. Of course, most of us know him for a spectacular call on Apple when it was in the 650, 700 range, best I can remember, and the peak was 705 intraday on September 21st. He predicted then that Apple would go to 425. That's a spectacular call. Absolutely spectacular. Good for him. Anyway, he sees further downside today in Apple to 300. So the problem with Apple today specifically was with its audio chip supplier, Cirrus Logic, which after the close yesterday reported net first quarter net revenue of as much as $170 million, but analysts were looking for $197 million, which is a huge, huge miss. Apple accounts for more than 90% of Cirrus revenue, according to supply chain estimates compiled by Bloomberg. Cirrus is the main provider of audio chips for the iPhone and iPad, and Cirrus missed because they missed their estimates of unsold inventory. Intel, as you know, reported after the close yesterday while I was doing this video. It maintained its sales forecast for 2013 despite the industry-wide slowdown in computer sales. But it still expects a low single-digit increase in revenue across the year, like whoop-de-damn-do. And first quarter revenue of $12.6 billion was down from a year ago's $12.9 billion. Yahoo reported after the close yesterday. Profits rose nicely, 36%, but Yahoo's revenues were down 7% to $1.1 billion. And that's just been the story for quarters now. A lot of strategists ignore it, and the market's going higher. My forecast is that we're flat for the whole year. I don't change it. NASDAQ would finish up 5%. That's my call. There's no top-line growth. And it's increasingly difficult to squeeze out more on the bottom line. Russia's economy slowed to 1.1% growth in the first 3 months of this year. That's important because that contrasts with 4.9% growth in the first quarter of last year. So that is a very, very steep decline in growth. Of course, Russia is dependent on the oil price to a great extent, so weakening oil prices are bad for the Russian economy. Yesterday I talked about the situation in Venezuela and how there might be some violent protests. Today, turns out the main violence occurred yesterday. 7 people died across the country. Nicolas Maduro blamed the worsening violence on fascist mobs backed by the United States and accused the opposition of plotting a coup against him. Well, there will be a coup against this idiot. That's really what he is, sports fans, an idiot. The president called on his own supporters to head into the streets. I'm going to use a hard fist against fascism and intolerance. If they want to overthrow me, come get me. With the people in the armed forces, I am here. Well, it's the armed forces that are going to overthrow you, Mr. Maduro. Meanwhile, opposition leader Enrique Capriles called off the rally for today. He said, "We are ready to open a dialogue with the government so that the crisis can be ended shortly." Called Mr. Maduro illegitimate. Well, that's all for today. I did watch Margaret Thatcher's funeral this morning. Very touching. What was incredible is that the Queen was attending the first funeral of one of her prime ministers since Winston Churchill's state funeral in 1965. God love the Queen. There were not big demonstrations today, and that's good. Finally, William Crystal of the Weekly Standard, I loved what he said about Margaret Thatcher. If only the Iron Lady were a model for our plastic men. Take care, I'll be with you tomorrow. This is Vera Lynn.
I'll never forget